The job description of portfolio manager involves a delicate blend of financial expertise, strategic thinking, and interpersonal skills. Portfolio managers are responsible for making decisions about a collection of financial assets, a portfolio, that their clients or organizations own. Whether it's stocks, bonds, real estate, or a combination of instruments, the portfolio manager plays a key role in optimizing returns while mitigating risk. They must balance competing priorities and account for a range of market conditions to maximize portfolio performance. Portfolio managers typically work for financial institutions, banks, pension funds, hedge funds, or asset management firms. Some may manage portfolios for high net worth individuals, pension plans, or other institutional investors. Whatever the context, their main objective is to grow the portfolio's value over time while honoring their clients' preferences, risk tolerance, and financial goals. This role combines deep financial knowledge, from understanding financial markets and instruments to employing sophisticated strategies, with strong judgment and communication skills. A successful portfolio manager must be able to cut through market noise, anticipate future trends, and make decisions that align with a well-thought-out investment policy. Primary responsibilities of a portfolio manager. A key responsibility within the job description of portfolio manager is developing and implementing a coherent investment strategy. This involves designing a portfolio that aligns with a client's goals, whether those goals center on income, growth, capital preservation, or a mixture of all, while honoring their risk tolerance and liquidity preferences. The portfolio must be constructed in a way that efficiently allocates assets across different sectors, asset classes, and instruments to maximize risk-adjusted return. This process starts with extensive research. A portfolio manager performs in-depth analyses of financial markets, industry trends, and individual companies. They may rely on reports from analysts, financial statements, and economic indicators to form a view about future price movements and opportunities. Once the portfolio is constructed, portfolio managers constantly monitor its performance against benchmarks and goals. They track financial markets and holdings to stay informed about developing risks and opportunities. If a particular holding underperforms, or if market conditions shift, the portfolio manager may rebalance the portfolio by selling weak positions and adding more promising ones. Risk management is another key component of their responsibilities. A portfolio is subject to numerous risks: market risk, credit risk, and liquidity risk, to name a few, and portfolio managers need to implement strategies to control or hedge these risks. Techniques might include diversification, hedging with options, employing stop-loss orders, or reallocating holdings to more stable assets during periods of volatility. Reporting is a crucial part of a portfolio manager's responsibilities as well. Clients, stakeholders, or regulators may require periodic reports on portfolio holdings, performance, transactions, and strategies. The portfolio manager must be able to communicate these reports in a clear, accurate, and insightful way, addressing both the results and the decisions that influenced them. Essential skills and qualities for the role. To be a successful portfolio manager, a unique blend of skills is required, both hard financial expertise and soft interpersonal abilities. Analytical skills are at the core of this role. Portfolio managers must be able to absorb large amounts of financial data, perform valuations, and draw actionable conclusions. Decision-making under uncertainty is another key competency. Market conditions can be unpredictable and portfolios are subject to numerous risks. A portfolio manager must be able to act decisively under pressure and adjust strategies when the data signals a change in direction. Excellent communication skills are equally important. Whether addressing stakeholders, regulators, or team members, portfolio managers need to convey their strategies, decisions, and results in a clear and compelling way. An ability to translate complex financial concepts into simple, actionable messages is a huge asset. Risk management expertise is non-negotiable in this role. A portfolio manager must thoroughly appreciate all the risks a portfolio is exposed to and implement strategies to control or hedge those risks. Quantitative skills, understanding models, risk metrics, and financial instruments, are indispensable for designing portfolios that maximize return while honoring risk tolerance. Lastly, interpersonal skills and maturity under pressure are crucial. A portfolio manager interacts with a range of stakeholders, traders, analysts, regulators, and clients, and must maintain confidence and professionalism under stress. Work environment and challenges. Portfolio managers typically operate in a fast-paced and challenging environment. Market conditions can fluctuate quickly, and portfolio managers must stay vigilant and adaptable at all times. Success depends on their ability to respond decisively to changing conditions and to cut through market noise to find signals that matter. Some portfolio managers specialize in particular asset classes, stocks, fixed income, real estate, or alternative assets, while others manage portfolios that blend different instruments. The role often involves extensive collaboration with research analysts, traders, and risk managers. The pressure to perform can be considerable. A portfolio manager's decisions directly affect financial outcomes for their clients, their fund, and their own reputation. Market downturns or poor decisions can undermine years of strong performance, adding an additional layer of stress to the role. Nevertheless, portfolio management can be a rewarding career. Successful portfolio managers enjoy substantial financial incentives, industry prestige, and a deep sense of accomplishment from helping clients meet their financial goals. Educational requirements and training. Most portfolio managers hold at least a bachelor's degree in finance, economics, business administration, or a related discipline. Quantitative fields, such as mathematics, statistics, or computer science, are also valued. Some pursue advanced degrees, such as MBAs or Masters in Finance, to deepen their expertise and enhance their credibility. Certifications are a key consideration in this field. The Chartered Financial Analyst (CFA) credential is particularly well regarded and signals a deep understanding of financial markets, portfolio theory, and ethics. Other certifications, such as the CAIA, Chartered Alternative Investment Analyst, may be desirable for portfolio managers who specialize in alternative assets. Training typically involves developing expertise under the supervision of experienced portfolio managers and analysts. Junior portfolio managers may start their careers as analysts, developing financial models, performing industry and company research, and making recommendations. Over time, with demonstrated expertise and judgment, they may progress to managing portfolios directly. Conclusion. The job description of portfolio manager underscores a role that is at once challenging and rewarding. A portfolio manager must blend rigorous financial analysis, decisive judgment, strong communication skills, and a deep understanding of markets and instruments to maximize portfolio performance while honoring client goals and risk tolerance. This role plays a key part in financial markets, allocating capital efficiently, helping businesses grow, and securing financial futures for a range of clients. The portfolio manager's decisions affect not just portfolio's bottom lines, but also the financial well-being of pensioners, businesses, and institutions that rely on their expertise. For those who enjoy a fast-paced, intellectually challenging environment, portfolio management offers a unique opportunity to make a measurable impact while employing a rich combination of skills. The job description of portfolio manager highlights a role that demands discipline, curiosity, adaptability, and a deep understanding of markets. A perfect match for those passionate about finance and eager to maximize the potential of their portfolios.